Hey everyone, and welcome back to another episode of Data Driven Value, where we show you the tools and we teach you the skills to help you take your financial freedom into your own hands. So today we're going to get into the charts. We're going to kind of follow up about the video we did on Saturday. So we talked about tariffs and potential trade wars, as well as the economic effects, as well as kind of the consumer effects of these potential scenarios if they were to continue playing out. So obviously we have the SPY here. So it's quite red today, and not super bad. It was down almost 2% in the future overnight, so nice to see. It is getting a little bit of a bounce here, but we are noticing that our gold is rallying here. So our gold has broken its all-time highs. It's in this distinctive uptrend. It's super strong here for gold. So definitely shows you that the risk off assets are starting to perform very well. If we flip over to our dollar chart, obviously again we see here the dollar coming in, putting in that slightly lower high here. So let's just watch this, and what we want to see essentially for Bitcoin and for risk assets to start doing well in the near term is we want to see the dollar come back down, break below these lows, and then come back up, retest that bearish rejection or bearish retest here is what we're looking for, and then a further breakdown for our risk assets like Bitcoin or tech stocks to really go on to outperform. But obviously we see here silver doing well today in the green. TLT, another one we talk about. So that's one we actually do have a position on. I've been talking about TLT as a hedge position kind of for that macroeconomic downturn. Generally, this is a flight to safety asset. So as people go into a risk off environment, they're going to start selling their riskier assets like tech stocks, Bitcoin, crypto, that kind of stuff. And they're going to start buying assets that they think will appreciate kind of more in a constrained economic period. So TLT generally does very well. Kind of obviously, if we go into a recession, investors are going to look for that flight to safety, and generally bonds are that flight to safety. So just looking across the board, obviously here through all the major indices, we actually do see Bitcoin a little green on the day today. So I'll flip over there quickly. Look at this huge wick though, all the way down past our 786. Looks, we tagged that area of interest. So yeah, that's a swing position for Bitcoin. If you did catch that, great job. That's a great swing. That being said, I'm not fully sold that we're out of the woods in terms of volatility here, but you can see obviously why we mark these zones of interest, because it's acted as support right now. If you did actually catch this move, that's even just from the top of the range of what we targeted. So if you entered at 92,000, you're up 7.5%, already above this 618 here. What I want to show you though, and what we need to watch out for, you see right here, we put in this lower high and then a lower low. So right now we've got one lower high and one lower low. If we go up here and confirm another lower high, that's actually a technical downtrend, and then we just need to watch and see where price comes down. If we do go into a pattern like that, I'm going to be looking at kind of something like this. So we'll probably find, there's resistance through here. We have this sell order block. So this is where people have orders to sell their Bitcoin. So I'm going to show you with my Fibonacci tool how I kind of gauge some of these resistance levels. So we pull from this swing high down to this swing low, and same thing with our entries. That golden zone up here is really going to offer kind of resistance in terms of the price action here. So we're either going to see price come up here, it might get rejected before this zone here in the 786 kind of golden zone here, or it might even come up here. But again, we're just watching again lower high here. So watch this high. If we come here and we reject, either we're going to have to come back, put in that higher low, and then really try to kind of reverse that trend structure to the upside again with those higher lows and higher highs. But until then, all I see right now is the potential for us to kind of reject, confirm that downtrend, and then we're just looking for the next entry down here. We'll take a look at the RSI. It's quite oversold, obviously, and the MACD also oversold, so it definitely can support a bit more of a move up. We did have some kind of escalations within the global kind of trade war tensions there. So obviously, U.S. imposing tariffs on Mexico, China, and Canada, as well as threatening it on the European Union as well. Sorry about that, on Europe. So obviously they're not really backing down, but we did see today they have postponed the tariffs for Mexico for a month. So we'll see if we get similar news from Canada. That was kind of my most bullish case scenario in the near term, was that we actually just saw some de-escalation of tensions, and then markets were able to get a bit of a relief bounce here. Obviously, similar to Bitcoin, not looking as oversold here. So actually looking kind of bearish, or like we're losing momentum on the SPY. You can see again, we put in that lower high, that lower low, and now if we put in another lower high, that's that confirmed confirmed downtrend, and again, I think we just come back. We either retest these lows, try to put in a higher low, maybe base ourselves here into a bit of a reversal structure, try to break out. But we also see that 618, 786 also presents an opportunity. Another thing I want to show you here, we've talked about the Japan carry trade. So lots of the times, narrative follows price, not the other way around. So we obviously see here, right around here, this is when the Japan carry trade first started unwinding, and we saw that 10% stock market correction. Similar here, we started to see it unwinding right up here, and then again, 10% stock market correction. It's not quite accurate there, sorry about that. Yeah, 10% pretty much brings us right down, right around that 618 Fibonacci. If we do see a larger retracement, this is where I would be looking to start kind of accumulating the SPY. That being said, if we do go into a recession, that would actually be a more substantial drop in the SPY, in my opinion. We might be looking at a 20 to 30% correction, just kind of based on historic past recessions and the corrections that have corresponded with it. We've kind of touched on that uninversion of the yield curve, as well as some of the other worrying economic factors that might actually push us kind of into this more recessionary environment, especially if we keep getting increased tensions in terms of global trade. That's really not going to be good. So I'm going to show you back here. This is essentially, we're going to look at when the last time they actually raised those or put in tariffs, kind of in a similar situation. So we see right here, look at this, that essentially they put in tariffs on March 8th. So I didn't quite have March 8th marked here, but you see basically we put in that high right around the day that tariffs were announced, and then you see, look at this dump in the market. That's, look at that. 10%. Same thing that we're looking at over here. So 10% dump in 2018 when they put tariffs in, and that just happens to coincide with the 10% dump that would also resemble similar to our previous Japan carry trade dump here, as well as take us back to that 618. You see that buy order stacked right there, so a really good confluence of support. We're definitely looking to accumulate the SPY down here, and then kind of in a worst case scenario, if we do go into an official recession, expect 20% plus correction in the stock market. It's not necessarily my base case right now, but it is something I keep in the back of my mind. I like to have enough cash to be able to take advantage of those opportunities as they come. Obviously, yeah, just looking at the different momentum indicators, so looking a little bit bearish on the daily here, and then yeah, we are watching this for that potential confirmed downtrend or switch to a downtrend. So yeah, just looking at that obviously, and then we'll go over again to gold. We'll take a look at gold on kind of the lower time frame, get an idea. Look at this beautiful breakout, retest of support, and that's just that continued uptrend. So gold's not showing any signs of stopping. It's literally holding all major supports. It's broken out of its all-time high. It's in price discovery. This is a really bullish setup for gold, so we'll see where it tops out at. But for the time being, it doesn't look, this isn't an encouraging sign for our risk on assets, like definitely not very encouraging. I'm taking a look obviously at our DXY, so the DXY, the strength of the dollar. Again, for risk assets to outperform, you generally want to see the dollar in a downtrend. So it is nice to see on the 4 hour getting a little bit oversold, heading towards that bearish cross. Hopefully we do see a bit more dumpage here. That being said, it is still holding those lows and highs. So we pull our Fibonacci here. Look at that. And so yeah, it came down to the 618, might come back to the 786. Ideally, yeah, we want to not hold these lows. We want to see it break down, retest, and then that continued breakdown. So if we want to see our risk assets do well. Flipping over to the US 10-year, so just looking at this, obviously dumping out back to support here, wicked below it, got a little bit back above it on the 4 hour. If we take a look on the daily chart, again, yeah, just coming back, sorry about that. Coming back here, essentially, yeah, we did lose this low. So in the, you see here, lower high, lower low, we're in that potential downtrend again. Ideally, we want to see this kind of coming down there as well. TLT is looking good for now. We're just going to continue holding our TLT position. That's our hedge position. If economic uncertainty kind of comes back into play again. So yeah, there is definitely some relief in the markets with the news that they're postponing the tariffs on Mexico, hopefully postponing the tariffs on Canada. But that being said, he did just threaten more tariffs on Europe yesterday. So I don't think this is I don't think we're out of the woods yet, and if history's any indication of prior price action, then we could definitely be due for some more volatility, bringing us back to these greater levels of support down here. we'll take a look at our stocks just to kind of see how the different markets are doing here. So Tesla is down a little bit today, actually down about 5%. So quite a decent little drop for Tesla. We'll pull up the chart and kind of take a look. So seeing here, just coming right into this buy order block. But again, we have that lower high and lower low structure kind of forming here. So looking at that 618786 Fibonacci zone for a potential entry there. Nvidia will flip over there. Another one, it's actually in that golden zone here, coming back, kind of retesting this down sloping trend line. So obviously I don't have a crystal ball. I can't predict what's going to happen in the markets going forward. I can't predict what politicians are going to do. Most of us didn't really know that he was going to be so aggressive with these tariffs and kind of hit everyone with them. And we did see crypto and Bitcoin dump like crazy over the weekend in retaliation. Obviously, because they're the only assets that you can access 24/7, when bad economic news comes out on the weekend, Bitcoin and crypto can really feel the pressure and really dump out because it's the only assets that people have access to sell at that time. The stock market isn't open. They're not able to sell any of their other assets. So they're selling the riskiest assets that they have the easiest access to. So that's Bitcoin and crypto. Generally, I do like to avoid trading on the weekends because there is less liquidity in the market. So it's typically more volatile. Market makers are able to kind of push prices around as they see fit. But yeah, looking at Nvidia here, you know, not the worst place to buy if you're an Nvidia bull, an AI bull, and you kind of believe that all this trade war tariff thing is being a little blown out of proportion. Or if you think maybe we can come to some negotiation or resolution and start to actually see some relief in the market. So not the worst place for a bit of a bounce play here. That being said, again, recognize the broader market risk. If we are to break down below this level here, then again, we're just in that continued downtrend and we're looking at a bounce more likely at these lower levels of support like down here. Obviously, Amazon quite flat for the day, so we're not going to look too much at it. I'm not very interested in Apple, honestly. Take a look. So I like to look at the dollar store. So these are almost good indications when people get scared and they think there's a recession coming. Dollar stores generally do very well. So you'll see in times of recession, dollar store stocks pumping. Obviously, we see Dollar General here came down to these lows, wicked just below it, but bounced, came up to resistance, coming back, put in that higher macro low, and it's bouncing here. So again, we just want to see these highs being taken out. If we do start to see an uptrend forming on dollar stores, that potentially could tell you that people are a little worried that prices might get a little extreme in the near term. And that's also what we talked about when we talked about the effects of these trade wars on the consumer. It's the consumer that foots the additional cost at the end of the day. So you definitely understand why during times of hard economic pressure that people really kind of go towards the dollar stores. They're able to save a little bit more money. Yeah, really you just have to pinch those pennies in times like that. So dollar store stocks we see doing well. We're seeing some other kind of mixed results here. So looking at Dell is one I'm a little interested in it as a potential position. That being said, kind of the way the chart's looking right now, it's just in this technical downtrend. It is at pretty good high time frame value. Dell is kind of why I think they might be a decent play for 2025, 26 is they're one of the largest providers of the servers needed to run these AI chips or these GPUs. So definitely going forward, they're looking at billions of dollars of revenue in terms of AI servers and data center infrastructure, that kind of thing. That being said, though, we do want to see this kind of price action reverse its trend before we really start to take a position in here. Again, we're just kind of recognizing the broad stock market risk. So if we do see a 10% plus correction, even a 5 to 10% correction in the SPY, it's going to knock all these stocks down quite a bit. So yeah, just keeping that in mind and waiting for that confirmation before we enter anything. Look at Baba here, another one, just beautiful, came up, hasn't even come back to this additional entry here, but basically just bouncing and continuing up here. So Baba is still running. I got a little spot position in Baba. I've been holding that for quite a while since back in August. So just following that still, and yeah, decent little trade here. So there is opportunities in the market as well. So obviously, you know, China markets aren't going to run at the same time or the same kind of pace as American markets all the time. So there is opportunities elsewhere. I kind of saw Baba here really get beaten down to kind of like historic lows, and then started to see some signs of the Chinese government actually kind of trying to stimulate the economy a little bit. So obviously we expected Chinese stocks to do a little bit better, and then they came out with their AI model here, which has caused this soaring price action right there. So really good job. AMD, another one, I kind of am considering this one in another, similar to Dell here. They do have that potential as an AI chip manufacturer to really kind of hopefully take some market share from NVIDIA. We do know that Meta uses AMD chips. They also use NVIDIA chips as well, but there are big players that use these AMD chips. So it's kind of one I'm just watching. Again, I want to see more bullish price action, a more convincing bottom form before I really start to take a position in here, just because all these AI related companies, their valuations are quite crazy. So, I mean, if I were to buy AMD versus NVIDIA today, I would be leaning more towards NVIDIA just based on the chart and kind of based on the forward guidance there. Intel's up a little bit. Other AI companies also up a little bit here. Kind of mixed results across the board. So we'll just flip over to crypto here. Obviously, we see Bitcoin below 100,000. Again, we talked about that. So we'll flip over to Bitcoin dominance. So this is a very crazy chart. This is what we were talking about. You know how I've been saying, you know, alt season isn't yet. We're waiting for that confirmed top on dominance. Well, we just blew past the previous high here, like absolutely smashed it. We went up over 64% of Bitcoin dominance. So this is what happens when the market de-risks. And you see altcoins, we'll get into them in a minute, they bled bad. So if you were heavy into altcoins around here, you really felt it. So that's what we do and why we look at the charts. We recognize the risk here. We saw that altcoins were looking weak. We saw that Bitcoin dominance was looking strong. We saw that the dollar was strong. We saw that the SPY was looking a little weak. And we saw that gold was strong. So those are all major indicators that risk off assets are not going to perform as well kind of in the near term. And the risk on assets are not going to perform well, and the risk off assets are going to perform better. So obviously, yeah, we saw here, anyone in alts really felt this. I had a couple alt trades open. They were hedge trades, so that's what I like to do. I like to hedge myself in this market. Generally, I have a lot of exposure to the market. I maintain a pretty solid cash position, at least 20% cash, ideally, to be able to take advantage of dips. And then I also just, in terms of riskier short-term positions, I'm just a lot more conservative with my profit taking. So in Bitcoin, we saw here, obviously, came up, kind of started pushing these highs, and we obviously saw these lower highs start to form up here. So we started to see some weakness in Bitcoin. So that's my cue to exit my high-risk trades here, especially if they're in profit. So I'm going to exit my riskier stuff up here because the overall market structure is just not looking very bullish. That being said, again, I don't have that crystal ball. I have my core cycle positions. So I've got the altcoins that I've held for months to years. I've got my Bitcoin miners. I've got my Bitcoin and Ethereum. I've built these positions for years now, and I have them at a good enough cost basis where I can essentially ride any of this volatility. So whatever the price comes down to, I'm okay in those core cycle positions. I don't feel any pressure. I don't need to sell them. I just wait patiently and I add to them when it makes sense, or don't get that opportunity and I just look for the next one. Again, it's all about risk management with this. You have to preserve your capital before you grow it. If you lose your money, you're not going to be able to grow it. It's going to be very kind of discouraging on your investment journey. So again, manage that emotion, recognize the price action or the patterns, and then just be patient and trust that your analysis is right. And it's not always going to be right. That's okay. You have to accept that. It's part of the game. You just have to look and analyze where you went wrong and then adjust that going forward. So flipping over to Ethereum, look at this huge dump, guys. Like if you were buying Ethereum up here, that's exactly what we say. We don't buy into resistance. That's never what we want to do. Again, look at this support line acting, so huge buy support through here. This horizontal support, we got this upsloping trend line. That's where Ethereum bounced from right now. So even a nice little bounce. Again, if you caught some of these lower support zones, you know, 25% move in less than a day is pretty good for a lot of people. So if you did catch that, great job. That being said, again, just watch, look for a rejection here, look for that lower high and likely continued downtrend. Otherwise, maybe it's that lower high and then we come in, put in a higher low, and we can start to really reverse that structure. But yeah, you can obviously see Ethereum looking weak. Even just yesterday's dump, look at that, a 37% dump in like 2 trading days essentially. Like that's insane. So hopefully nobody got hurt too bad on that dump out. I hope nobody really, there was a lot of liquidations. Again, that's why we don't over leverage ourselves when prices are up here. When you see price at resistance, generally the best thing to do is just sit on your hands and wait for that confirmation. Wait for the chart to tell you which way the market's going to go, and then make a plan. And so, like with this one, obviously our plan was to buy kind of the support down here. So if you did that and you bought support, then yeah, you're sitting in some nice profits right here. But again, recognize the potential for further downward price action. That being said, it might just offer additional opportunities to continue buying. Look at Ethereum, Bitcoin here. This is a crazy dump out again. Came down right almost to the middle of this support zone here, acting as support, bouncing. So this is another one I was talking about how we want to see that bottom structure form. So higher lows, higher highs. Until we see that, I'm not entirely sold on Ethereum or the altcoins right now. We really need to see some strength from Ethereum, I think, to really push these altcoins into the alt season that everybody is wanting and everybody's anticipating. Flipping over to Total 3. Look at this huge candle. Look at that wick. Right down. Look at that, guys. Perfectly in the middle of our Fibonacci golden zone support. That's why I show this zone often. Look at that. So from this move up to here, another 20% move in the total market cap of altcoins. So Total 3 coming back up here again. We're just in this resistance, so watch that. Wait for the higher low. Maybe we put in our higher low at the 618, and then we're able to try and reverse our price action there. But others dominance, I pointed this one out as well in recent videos. So basically, if you followed my recent videos, none of this price action should have come as a surprise to you. We saw this breakdown, we saw the bearish retest, and we assumed a continued downtrend. So we didn't take any high risk alt positions right here because we saw that weakness. And then now we have more capital, we preserved our capital, and we're able to get more of the assets at a cheaper price. So you're getting, not only are you lowering your cost basis, you're getting more for the actual price that you pay when you wait for this confirmation and you wait for those lows to really form. So again, we don't see it actually forming that low quite yet. Obviously Solana, this is one I'm watching. So definitely we came back down. Look at this. We held this low. So held the macro low, came up here. What I want to see now, essentially, we might be looking at a bit of, we might see a downtrend from this high up here. We just see this trend line. Essentially what we're going to want to do is break out of here, back test, and then maybe we can continue higher. I'm not convinced that we'll be able to take out these highs. I might look at this as a bit of a swing trade on Solana. I'm looking at a few different trades to kind of hedge the different market outcomes. So again, I talked about that I have my core cycle positions. I'm just holding those. Those are spot positions. I've been holding them for years. I'm going to continue holding them as long as I think the cycle structure is going to play out. If structure changes, then we'll reassess that as it comes. But here we see obviously similar price action. If the market is to reverse from here, this might be a decent little trade right through here. We would have to pull that Fibonacci zone and look for the exact entry, but this is just the general price action I'm looking from Solana, maybe a decent little swing trade. Here, Doge, we actually lost our prior low, so we are bouncing, but again, look at this. This is what we saw in others' dominance. Breakdown, go up, rejection here, further downward price action. We just need to build that base here. So Doge, getting a nice bounce, but again, it's just not showing as much strength, and it didn't hold those lows like Solana. We'll actually just take a look at the Bitcoin pair of Solana too. So again, Bitcoin pair and Solana holding its lows, looking stronger. We'll look at the Bitcoin pair of Doge here. Just to compare the two. Again, you want your altcoins to be outperforming on their Bitcoin pairs. So Solana versus Doge, I like Solana way more. Look at all this sell volume up here on Doge. So it's going to face a lot of resistance. You also lost this low on the US dollar and the Bitcoin pair. So not maintaining that higher low structure like Solana is. Solana looks stronger in my opinion. I'm going to flip over to Link here. Link also came down to that support zone. So again, look at how our support zones kind of perfectly target that middle range right there. We did get that bounce. Again, we're in that kind of similar pattern where we're stuck under resistance now, waiting for that to play out. And then obviously we see here Link came down to this support zone of the Bitcoin pair, bounced up here. So we're waiting for that higher low. Again, we've lost this low. So still just that technical downtrend on this time frame here. I will flip over to, let's take a look at XRP. It seems to be doing well today, but again, all these have lost their lows on this wick, unfortunately. So again, into resistance, want to see it break back, hold these, and then maybe we get a continued push higher. SUI has recovered pretty well. It did have another big wick as well. So yeah, into resistance, kind of got rejected there a little bit. Back here, we'll see what happens there. So essentially, a lot of these charts are going to look quite similar. I did express some interest within my Telegram group of some altcoins that I said were decent DCAs. If you bought those DCAs, then you should be sitting in decent profits as well. That being said, don't feel like that you've missed out. Nothing moves straight up or straight down in a V-shaped recovery unless the government prints $2 trillion, as we've learned. So don't feel like you've missed out. Just know that you're waiting for confirmation. So that's the kind of the thing. And what I talk about kind of managing your risk is just buying up here because you think you missed out when you're coming into resistance here. That's not the smartest thing to do. Again, we're likely just to come back, retest other support levels, change that market structure into the reversal so we get those higher lows, higher highs, and then we can continue our new uptrend and see where it tops out at. But again, we don't want to take excessive risk up here and then have the market dump back down here or even lower. So we're just watching those. Another one that we're watching. So look, beautiful breakout, came back, retested this support, and it's back near its all-time high. So ALM's showing a lot of strength here. Kind of just moving down the board. Virtual as well. Look at that, guys. 786. So even though it came lower, that is just a wick. So the majority of the candle bouncing right here at the 786. If Virtual is going to go on to do well this cycle, I think it needs to see some strength pretty soon. Obviously, we did lose these lows, so technical downtrend, no confirmed reversal yet, but hopefully we do start to see some strength from Virtual again. It showed insane strength all the way through here, and then this long downtrend. So we've seen that from a lot of different assets, and it's not really surprising, but yeah, hopefully we start to see some relief here. I'll flip over to Arrow, I want to take a look at as well. So again, back at our 786, touched this buy zone here and bounced. So we're also just see this resistance. Again, you guys can kind of see how we're just looking at a lot of potential downtrends or potential trend continuations to the downside. I argue Solana actually, if you're looking at any crypto right now, Solana looks better than some of these other ones I looked at. But again, that being said, just recognize the macro risk. Moving over to the miners, we see here obviously down a little bit. They have recovered a bit today, which is good. Wolf and Iron in the green. We see Coinbase. So we'll take a look, see kind of the prices that they've come down to. So look at this, 786 for Mara. That's a DCA position. If you do believe the market lows are in and you believe that kind of this is all FUD, blown out of proportion, and you think we're going to reverse. So that being said, I have a spot Mara position. My cost basis is a little bit low. Well, saying a little bit lower, it's quite a bit lower than the current price. I've been building this Mara position for about 3 years now this cycle, and I also kind of traded them last cycle as well. So yeah, I'm not really interested in adding personally myself right here. That being said, again, I don't have that crystal ball. I'm just anticipating the potential for more volatility, and in that event, I just want to make sure that I have the cash to take advantage of it. And because my cost basis is a little bit more competitive than the current prices, I'm not really interested in adding at the current price and raising my cost basis. I'd rather wait for it to come back further down. Maybe we retest these support levels down here. So kind of looking at 1550 or maybe lower for Mara, where I might start adding again. But again, that being said, this low time frame DCA isn't the worst place to buy, but you need to recognize the external market risk. Obviously, looking at the daily chart, kind of a bearish cross of the RSI and the MACD here. So maybe some more downside in the miners. Obviously, they kind of opened pretty red, recovered a little bit with Bitcoin making a bit of a recovery. Flip over to miners on kind of the grand scale here, that WGMI. So when we zoom out, again, I just like showing you guys this chart because it really removes a lot of the noise. So I know it's scary. Obviously, it's scary when you go down like this and this and this and this and this. This is a highly volatile asset class, so you do experience these massive run-ups followed by large retracements, and I just think we're in another one of those. So while we did come to the 618, these prior retracements, they either hit their 618 or they at least hit their 786. So more often than not, hitting that 786 level and coming down there. So we keep that in our back of our minds here for WGMI. Flipping over to CleanSpark, again, level of interest, it's not really holding super well right now. We'll take a look at the momentum indicators. Again, a lot of these charts are going to look quite similar, especially during days of weakness without any kind of bullish catalysts for the miners. All the charts are going to look pretty similar. Cypher here, we do see, so this is one we were watching that had that crazy run up because of their recent news. And look at that, guys. So this is why we don't buy up here. We don't buy up here. We're just patient. And we wait. Price came to our golden zone, and look at that bounce, and we're just coming back again. So if we were to take this Fibonacci and you're bullish on Cypher, looking at the next potential entry, assuming that we can bounce here and continue higher, you know, you're looking at anything under $5 down to about $4.50 for Cypher. Bitfarms, I'm not very interested in personally myself. Hive here, we do see it did kind of lose this trend line. So it's got a little dubious trend line anyways, so it's still okay. We're holding these lows for now. It's fine. That being said, it is a bear flag structure. Looks like we've broken down bearish retest. Yeah, so maybe we come retest these lows down here. Might be an entry for Hive there. Flipping over to Iris Energy. Nice little bounce here, kind of in the middle of this zone here. But again, watch how it comes into resistance and see what it does there. Moving over to MicroStrategy. Kind of skipping over certain different ones because there are good buying opportunities. Obviously, our MicroStrategy swing trade kind of wicked down into the red, and we're just recovering. We're back at entry here. So kind of a little bit of a play on earnings. If they do get a pop into earnings, I know they've said that they're not going to use their FASB accounting standards this quarter, and that it's actually set to come in effect next quarter. It'd be interesting to see if Michael Saylor actually just kind of changed his mind and went with the FASB accounting standards, similar to what Tesla did. And then we might actually see an unexpected pop because they do have massive amounts of unrealized gains on their Bitcoin hodl. So yeah, MicroStrategy does have the potential to kind of pop into earnings. That's why I have it as a bit of a swing trade here. It's a little bit higher risk, and then I've got a stop loss below support here, kind of down, you know, under 270. I've moved it down. So yeah, just following that as well. And we'll flip over to some of the other miners that got beaten down. Obviously, Core Scientific. See here, it's just, oh, sorry about that. Wrong with support level. So yeah, even this, I don't know why it keeps moving that one. There. But yeah, basically this trend line here, we see, yeah, just stuck underneath now. So lots of resistance here. We want to see cores break out, and yeah, so well, pretty much we're just waiting for that bottom confirmation. We want to see those higher lows and higher highs start to form, and we want to see some strength on the Bitcoin pairs. Obviously, if we can get some more relief on the macro sense, so if there's more kind of de-escalation of the potential trade war, then hopefully some of these markets can go on to recover a little bit, and we might be able to kick the can down the road a little bit more. That being said, you guys know my thoughts on the potential issues surrounding the trade wars and the tariffs. We talked about it on Saturday. I'll link the video in the description if you missed it. It's a really good one. It'll kind of explain past historic examples as well as the effects on business and the consumers. Other than that, this is just a quick market update. I wanted to give you guys my thoughts on everything. Man, there is some opportunities out there, but that being said, there is a lot of risk, a lot of unknowns, and a lot of volatility out there. So just stay safe, manage your risk, don't over leverage yourself, don't over risk, look for those strong setups, wait for that bottom confirmation, and then pull the trigger when the time comes. Thank you so much for watching, guys. If you like the content, if you learned something new, please like, share, subscribe. It all means the world to me, and I'll see you guys in the next one. All right, bye.